Perfect. What's going on, everyone? Today we're going to go ahead and continue talking about all of the stocks that we ended up reviewing during our last stream, and we're going to go ahead and find some new stocks. Before we continue, let's go ahead and log into FinWiz and use FinWiz as our source to find some of these companies that we haven't been able to review just yet, that haven't popped up on our radar. So let's go ahead and start with our previous list of stocks that we ended up reviewing before this, and as usual, we're going to go ahead and start off with MFA. Alright, so MFA is still trying to break through this main resistance, so it's currently trading above 180-day and 20-day SMA line. So we ended up setting up our alerts that are still slightly below, actually slightly above the resistance line. So we're definitely going to be following up on this one in the near future, just to see the confirmation of break through the resistance. So the earnings report is going to come out, so we'll see whether this is going to positively or negatively impact the company's stock. Currently, there's everything that is perfectly set up, positively set up for the company's evaluation for potential of the breakthrough. But again, I would not want to hold or just buy something at this moment right before the earnings report. I would want that to act as a catalyst before I turn it into a profit and potentially take a position on this one. So we definitely have our alert set up above $4.20 per share, and the current price at which the stock is trading at is about $4.04. So definitely a very good stock, has been pretty profitable overall. And as you can tell, I've been taking positions just dollar cost averaging here and there, and we're definitely going to be following up on this one here in the near future. So, and just for those of for those of you guys who are just tuning in, don't forget to leave me a comment with what kind of companies you want me to break down, and we can do some technical analysis, and we can review the company and see whether it's a potential good buy, and see if we're going to go ahead and add that one to our watch list or not. So in the meantime, let me just go ahead and see if I can do a double screen on both of the things that I have open. This would be very beneficial if I can do that. Fantastic. All right. Let's go ahead and continue with review of our company. So we had just looked at MFA. Let's go ahead and look at KMI. So KMI. All right, let's go ahead and try something real quick. We're getting some feedback saying that there's a little lag. So video capture, boom. Do this one, we'll restart the sound. And let's try this one again. This should be helpful. All right, we don't want to take a position. That was just a misclick. And in the meantime, we're going to go ahead and actually double check something real quick. Perfect. All right, fantastic. Let's go ahead and continue. We just want to make sure that there's no lag between the webcam and the actual microphone. So right now we have KMI on the screen, and the KMI ended up dropping in price significantly by about 55% at the very beginning of the recession, right? So at the end of 2019, beginning of 2020, it was able to recover all the way to 180-day SMA line, and the recovery was probably triple digits, right? No, so 83% of the recovery, which is really, really good. All right, so last time when we looked at the company, we ended up saying that we would want to see another confirmation, but confirmation of the reversal pattern, and for the 180-day SMA line to start continue to go up before we take a position in this company. And so the reason for that would be because this is a very much a standard head and shoulders formation. So this is a shoulder, head, and a shoulder, and these seem to be pretty bearish. So we would want to continue making higher highs and confirm this line as a support before we take any more positions in this stock. But as of now, we're just going to go ahead and actually we're going to go ahead and try this again. Alright, we just got a notification saying that we ended up getting some feedback, some negative feedback, that there is a slight delay in the stream. So let's go ahead and close out some of the unnecessary things that we have going on here. Perfect, and let's try this again. Mic, we're going to go ahead and turn off our mic, turn it on again. This is good, this is good. This is good too. Just restart everything that we have overall, and we should be fine right now. Alright, so we're going to go ahead and set up our alert that is slightly above the current trading level, and we're going to follow up on this one here in the near future. But again, the approach that I would want to take here is I would want to double check and make sure that it continues to make higher highs. Alright, let's see if there's some negative feedback on the speed of the connection of the internet. But alright, perfect. And so at this point, we're going to want to see a little bit more. Well, it is what it is. So we're just going to continue streaming like this. Alright, so I apologize for those technical difficulties. But at this point, we're going to go ahead and actually let's check something. Let's check the health of this stream real quick. Edit, cancel. 0.95. Okay, roger that. Low latency, stream health. It seems like it's good. Alright, we're just going to go ahead and leave it at that, because there's no way I can really fix that right now. So, alright, sweet. Well, let's go ahead and go back to our FinWiz before we start hitting the actual website for more stocks. We're going to follow up on the previous ones that we talked about. Alright, so the next one is KMI. So we're actually just reviewed the KMI. Let's go ahead and move on to the next one, NYMT. So NYMT is the REIT, so Real Estate Investment Trust Fund. It ended up going, making higher highs, still trading above 180 in a 20-day SMA line. We're going to go ahead and zoom in real quick and set up our new alerts just to make sure that we see that it continues to make higher highs. If it starts making lower lows, then we would want to sell this position, so at or below. And we're going to set one up actually just a little bit lower, below 180-day SMA line. So the earnings report is also coming out, which is really good too. So for those of us who ended up taking a position, we don't want to sell on the news. We would want to see what their earnings report is going to bring. But again, make sure to do your own due diligence on everything that you're doing. So make sure to do that. So at or above, at or below, create. Good. All right, awesome. And let's go ahead and zoom out real quick and look at 1-year chart. So 1-year chart, again, NYMT is one of those real estate investment trust funds that ended up dropping by about 80%, was able to recover half of that in percentages. We ended up taking the positions about 250% raise. Now we're continuing to make higher highs. It's a very good bullish pattern, but again, once it breaks through this resistance, continuing to make higher highs. That's what I would want to jump into the position. But as of now, I would not want to take a position. I would not want to trade on the earnings. I would want that to act as a catalyst for the position that I'm currently holding right now, and just decide to whether I'm going to sell or whether I'm going to add on to the position after the earnings report. But as of now, it looks pretty good, and we're going to go ahead and move on to the next one. So our next one is going to be Gopro. And this one we had done the follow-up on, and actually I do remember receiving the alert on my phone when the stock ended up plummeting. So it actually broke, okay, so it went below $9 a share, which is interesting because that didn't get triggered. All right, so yeah, it's not a very, it's basically not a perfect setup because currently it's trading above, below this very, very strong support line, which acted basically that 180-day SMA line was a very, very strong support. It dropped below it, ended up confirming that as a resistance, as well as that 20-day SMA line. and it continues to hover around $7 a share right now. So let's go ahead and zoom out real quick at a 1-year chart. So the next major support is going to be at around this level right here, so $6 and almost $7 per share. So we would want to see it continue making lower lows and confirm this level as a support, or continue to make higher highs at this level right here. So again, if we're looking at a 1-year chart, it's still above 180-day SMA, which is good. And in previous sequences, we ended up seeing that it acted as a very strong support. So before we take a position or decide to actually, buy it or sell it before the earnings report, we would want to wait for that catalyst to happen, because again, the price right before the earnings report came out was way overbought, and we ended up setting up the alert at $11.23 a share just to see whether the earnings report is going to act as a catalyst to drive the price even higher. But it did exactly but the opposite. So again, not trading on the earnings reports. That would just be my personal experience with that, the best practice that I've had. So again, in order for me to take a position in this company, I would want to confirm it as a support and then start making higher highs. So simple as that. All right, and again, who is just tuning in, just go ahead and leave a comment in the comment section, and we'll go ahead and break down that stock for you as well. The next stock is going to be Nymt. Oh, this one is a very good one. I apologize, sipping on my tea. So Nymt is a very good real estate investment trust fund. So as you can tell, I'm really passionate about REITs because they pay 90% of their earnings, and usually REITs pay a very high dividend percentage. So if we go to Yahoo Finance, we can go and look at Nymt, and it's 11.88%. So it pays 11.88% annually on the shares that you end up buying from them, which is awesome. And as you can tell, it ended up going up by 17%, almost 18%. It actually went up by more than 20% during last Friday, but it ended up closing 17% above where it started the day, which is awesome. So for those of us who ended up taking the position, it's a very good time to hold on. I wouldn't want to sell this one just because it's trading at the previous resistance, a multiple, like just a 1-month resistance doesn't necessarily mean that it's on the overbought side. Again, this company used to trade at about $14 a share, and it's one of those REITs that hasn't recovered just yet. So again, trading at $4 a share when it used to be at $14 or $16 a share. Look at a 5-year chart, again, $19 a share. And it had not dipped below basically $11 a share. So a very good setup. Seems to be pretty bullish. The company had existed ever since 2011, at least that's what the Yahoo Finance is telling us. So chart looks pretty good. We can see that the company pays, again, 11.88% in dividends. This is very, very difficult to beat. So at this point, we're just going to February 19th, they ended up reporting their earnings. That's why it ended up skyrocketing so much. And we can actually see that here in a second. So there we go, perfect. So let's go ahead and zoom out on 180-day. So last time when it reported the earnings, it was still positive. It was at 44 cents on the dollar that it paid dividends. This time it ended up paying 22 cents on the dollar during their earnings report. But previously to that, it was paying negative amounts. So it reported negative 14, almost negative $15 on a share, and negative 9 cents on the previous price. So again, we are seeing the stock making higher highs right now. We would want it to continue trading above 180-day SMA line, because that had been used as a resistance and as a support multiple times. So as long as it's trading above 180-day SMA line, we're golden on this one, and I would want to definitely follow up on this within the next couple of days. Let's go ahead and set up our alert at the new higher high and see if it's going to continue making those higher highs. And we're going to set one up that is below it as well. Perfect. All right, so we ended up looking at Nymt. Then let's look at Cciv. So Cciv is a good one. think this one doesn't really pay any dividends. Yeah, so CCIV, yeah, so we're on the overbought price. I do remember why I ended up adding CCIV to this one, just because we wanted to follow up on this one to see whether it's going to continue to go up. So with $13.5 basically $billion valuation, the company is definitely on the overbought side, and I would not want to buy something at these valuations. So for this reason, I'm going to move on to the next one, which is going to be TWO. So TWO, I have a note for myself set up saying that this is a potential buy, and we're going to go ahead and see whether this is still a good deal. Yeah, so the company went, so during our last stream, we indicated this one. I think it was like about 4 or 5 days ago. We talked about this company and ended up going up on Friday by 5.5%. Again, a very similar pattern. Again, pays 10% in dividends, which is, again, very, very difficult to beat. Let's go ahead and look at the technical analysis. So TWO finally broke through the major resistance, and it ended up recovering just a little bit of that price, just so you guys can see it better. Again, ended up breaking through the resistance, recovered a little bit of that price bump, and is currently trading at almost $7 a share. So we have our alert set up for the next higher highs, and I'm going to set one up for lower lows at or below create. Perfect. All right, and let's go ahead and look at a 1-year chart again. So this company, again, TWO, ended up dropping by about 80%, just like majority of the other REITs, and it was able to recover approximately 120% from its previous lows. So as long as the company trades above 20-day and above 180-day SMA line, those are very good positive indicators. So for those reasons, we're going to follow up on this one again. And yeah, TWO, I'm going to make a note for myself. So it's about $7 a share. That would be good. 100 shares, that would be a good position to take. All right, so TWO. Let's go ahead and look at the next one, IVR. So again, IVR is another very good example. Ended up dropping by about, again, 90%, so 87.49%. And again, it was able to recover approximately 64% where it's trading at right now. So the company is definitely still on the oversold side from a 1-year chart. But again, if we look at a 180-day chart, it's currently starting to make higher highs. It confirmed this support trend line, and it confirmed this 180-day SMA line as a strong support line multiple days in a row. Now we have earnings report that is again coming out, just like for majority of these companies, that is going to come out on the 22nd of February, and we're going to see whether this is going to act as a positive or a negative catalyst for the company. So for those reasons, we're definitely going to see whether it's going to be beneficial to do this one or not, to trade this one or not. Let's go ahead and not deviate too much. CIM, let's look at CIM. And again, if you have any ideas for any of the stocks you want me to break down, just go ahead and leave me a comment and we can break those down. Okay, CIM, again, on the very similar setup right now. So we're just going to go ahead and set our alerts again for higher highs and see whether this is going to happen or not. And I love the fact that the company ended up trading above the major resistance. It's currently trading above both of the SMA lines that we have indicated. And if we look at the 20-day chart, we can see a potential reversal, right, for higher highs. I love the fact that our RSI indicator is not overbought, and we have MACD indicator that is pointing up with both of its arms. So that's perfect. This is a very good setup. What I would want to be careful with is, depending on what term you're buying it for. If you're trying to buy it as a long-term investment, then overall it's based on technical analysis, it's definitely on the oversold side. But if you're just swing trading it for a couple of days, couple of weeks, it's definitely on the overbought side. And you can tell by looking at the RSI indicator and also seeing that this is hitting the next peak, right? So we had already rejected, so the price got rejected like one time at least, at $11.78 a share, and current trading price is $11.51. So got to be very careful with this one, especially considering the fact that the earnings report is just around the corner right? Or did it actually pay out already? Yeah, so it actually acted as a catalyst. So it reported positive earnings, so 29 cents per share, and it ended up going up just because of that as well. So ended up going up by 8%, which is really good. So we're definitely going to follow up on this one, but a very good company, seems to be recovering pretty well. And definitely from the long-term standpoint, it's definitely not on the overbought side, which is really good. All right, so CIM, we reviewed this one. BA, yeah, so we wanted to follow up on BA just because it's recovering pretty well. It's continued to make higher highs on 180-day SMA line. It's again trading above that on 180-day chart, still trading above 180 SMA. Let's go ahead and look at a 1-year chart just to see whether it's still on the overbought, on the oversold side. So major support is going to be again at this level right here. I love the fact that it's confirming this level as a support right around here. And it ended up making kind of like a double bottom with a second leg being a little bit higher than the previous one, which is good. Very bullish sign. And the way I would want to trade this one is, again, I would want it to continue to make higher highs. And again, if you're buying for a long term, BA seems to be the company that has been having its peaks and valleys again, but overall has this trend line that it used to follow. Unfortunately, right now it's currently trading below that trend line, and what I would want to see is I would want to either create a new support line, support trend line, or I would want it to go back up to the previous support line and then confirm this as a support instead of the resistance. So, and because of that, let's go ahead and see what kind of alerts we have set up, and it's going to determine whether we are going to set up new ones or not. All right, that's good. And create at or below. Perfect. All right, there we go. So BA is doing well. All right, so let's go ahead and actually take a look at 180 real quick. Yeah, no, it's looking pretty good. It's looking pretty good. So we're not going to spend too much time doing this one. We already did this one during the last stream. ARL. So ARL, I think we talked about this one as a good swing trade. Let's go ahead and check 1-year chart. Yeah, so this one doesn't have a lot of volume. That's where you can see that the price ends up jumping too much, and it doesn't. The candle is not very concise. It's kind of jumpy. So you got to be very careful with this one, especially when you're trying to set up your stop losses, because the price can drop below your stop loss and just completely leave it behind. Again, ARL, let's go ahead and see if this one pays any dividends. ARL. All right, so for ARL, we have way too low of a cap for the company. So $163 million, and we do not pay any dividends. This is just a penny stock that we ended up identifying as the one that got just tanked in price, right? So $7.51 at its low, so May of 2020, and the company had existed for a while now, right? So ever since 1985, at least this is what the Yahoo Finance reports again. It ended up dropping to a $1.34, $1.60 in 2011, and this was 1991. Again, the company has been doing pretty well, and this price level, according to the 5-year chart, is not on the overbought side. So there's definitely a lot more room for improvement. But again, this is not the stock that you would want to necessarily rely on when you're trying to buy it and sell it right away, just because the price can fluctuate so much. So again, this is just my 5 cents on this one. I'm not very interested in taking a position on this one just overall, just because of the volume. But again, we have the earnings report that is coming out soon, and yeah, this is good. So let's go ahead and have some fun with some other companies. Let's go ahead and look at FIZZ, Fizz. All right, Fizz ended up reporting their earnings and split 1-to-1. Very interesting. It ended up spiking up so much. Let's go ahead and look at a 180-day SMA. Yeah, okay, so it came down a lot. So it doesn't seem like it's on the reversal pattern just yet. It had made this double bottom, and again, it's trading above the trend lines that we identified earlier, and it's trading still above 180-day SMA line. But what I would want to do is I would definitely want to see it continue to make higher highs. This is not the price level at which it's extremely beneficial, lucrative to buy this one. So I would definitely want, actually, let's see, I would want the confirmation to occur first. And this is on the 22nd of February. Yeah, so I would definitely want the split to occur before I take any positions on this one. Very interesting stock. All right, so we're going to go ahead and look and see if it has a lot of potential for the dividends. Okay, so it doesn't have any dividends, so it doesn't pay any dividends. Yeah, so it has been trading pretty well, especially over the past 5 years. Yeah, if we look at the max chart, again, the company is just exploding right now, and you gotta ask yourself, at which level would you think that it would be on the overbought side? If you say that $100 a share is on the overbought side, just like we had seen before in 2017 and 2018, then definitely would not want to take a position on this one just for now. But again, if you look at a 5-year chart, it's looking pretty good, and it's also again approaching those levels of overbought side. So not the best one. We're actually going to go ahead and remove this one from our watch list. Let's go ahead and look at CCL. So $27.45 billion valuation. If you look at a 5-year chart, the company ended up dropping to $13 a share, currently trading at almost $25 a share. Again, it has been pretty bearish over the past couple of years, especially since 2018 all the way to January, again December 2019. But it's definitely on the oversold side, especially when it hit rock bottom back in 2020, March of 2020. Back when it was at $13 a share. So the company doesn't pay any dividends, and if we look at CCL on the main chart, we can definitely see that it's starting to get on the overbought side, right? So both of the indicators are showing that on the 20-day chart. If we look at 180-day, again, it's approaching this level at which it got rejected before this. And if you look at a 1-year chart, that's a different story. Again, it's still definitely way below of the price that it was trading about a year and 1 month ago. But again, we have to identify this very, very strong resistance level. So it's approaching this level right around here. And what we would want to do is we would want to make sure that if the company continues to, actually we're not going to remove this one, I'm going to show you something else. If the company continues to make higher highs, it confirms this level as a support, then we're in the good position. If not, it would be a little bit harder to justify this one. So let's go ahead and look at a 3-year chart. So the reason why I ended up drawing this one is because it's a multiple year resistance line. So it's a very carefully drawn line that we would want to monitor, because the potential of it rejecting here is it's pretty likely. So we would not want to hold it past that I guess area once it approaches that that price level. Overall, we have about 20% profit margin, and we have about 17.44% to the next support line. So at this point, what I would want to do is, again, I already had my alert set up at this level right here. I definitely do think that it's on the overbought side. I like the idea that MACD indicator is still pointing up, and if it's a long-term investment, depending on how the cruise lines are going to do, I would definitely want to follow up on this one a little bit later. But overall, it's a good stock, especially if you were the ones who ended up investing into it at about $15 a share. So very good setup. I'm glad to be following up on this one. So let's look at RCL. So same kind of family of the company, and 1-year chart, again, finally breaking through. That's perfect. So we ended up identifying this both of these lines as a very strong support and the resistance. So it ended up confirming this line as a support, ended up breaking through. And did it report its earnings, and that's why it broke through the line? Or is it just because it's about to report it? So on the 22nd, again, so it hasn't reported it yet. So very, very interesting. So it's the people ended up buying on the rumors, and it's a potential sell on the actual news. So I would definitely be very, very careful with this one, but it's approaching the overbought side, especially after the 20%, 18% run up prior to earnings. So I would just be very, very careful trading this one. And again, if you're watching and if you want me to break down some of the companies that you're interested in, don't hesitate to let me know, and we're going to go ahead and do that today. So we just reviewed RCL and DFEN. DFEN. Oh, actually not there. There we go. Perfect. Definitely approaching the resistance line, so we would not want to do this one, but we'd want to make sure that it confirms it as a resistance and continues making higher highs. So if you're a long-term investor, you would definitely look at the companies that ended up dropping by about 90%, right? That continues to make higher highs to maximize your profit. So this is one of those companies, again, if it's a long-term investment, if you believe in the company, and let's look at their financials here. Let's see how big this company is. So it's a small cap stock, so $300 million valuation. If you look at a 5-year chart, the company used to trade at about $40 a share, 49, almost 50. Look at the max chart, again, it ended up dropping in 2018 all the way down to $27 a share, but it started off in 2017 at 24. Again, we're trading at $18 a share. Definitely lost 90% of the valuation, but continues to make higher highs. So definitely one of those companies that hasn't really been, so daily aerospace and defense, both 3x shares directly daily. Yeah, so definitely one of those ETFs that hasn't came up just yet. So definitely lost a lot of valuation. But 6.59%, that is really, really good. I think that happened just on Friday. Yeah, February 19th. Awesome. So let's go ahead and look at some other ones. NCLH. NLH. There we go, NCLH. We already looked into this one, did we? No, NCLH is also, again, very similar pattern. Again, the earnings report is going to come out on the 25th of February. The company is approaching this very strong resistance. It seems like it broke through this resistance, but again, it was at this level before multiple times and it got rejected. So we would definitely want to see higher highs before we continue buying into this stock. So NCLH, good one, but definitely want to follow up on this one a little bit later. Let's look at something more exciting. Oh wow, that's insane. Okay, so this one ended up, okay, so highly manipulative stock, and I think we talked about this one just to see what's going to happen. That's crazy. All right, so the company ended up reporting, it's actually about to report the earnings again on the February 22nd. It ended up, gosh, what a crazy run up. So about 125% from its previous support at 180-day SMA line. Let's go ahead and look at a 180-day chart. Again, approaching a very, very strong resistance. So if you're a day trader, if you're trying to short this stock, then it would make a little bit more sense to short this one instead of buying it. We have MACD indicator that is on the reversal pattern. And nothing says that the company cannot go up, especially when it's so highly manipulative. You can see that there's almost no volume at those companies. So definitely would not be very, very interested in this one. Would be very, very careful with this company. If we look at a 3-year chart, let's go ahead and see. Yeah, 3-year chart, extremely manipulative. Yeah, I would want to stay away from this one. Actually, I'm going to remove this one. NCL, no, EPON. There we go. CIM, the next one. CIM. All right, CIM is doing really well. Awesome. So we identified this company during one of our last streams, it ended up dropping by about 70%, so 68.64%. It was able to recover about 50% from its previous lows, and it's starting to make higher highs again. The company is trading at the previous resistance level, and what I would want to see is I would want it to come down just a little bit and confirm this previous resistance as a support before it starts making higher highs. And I love the fact that the earnings report had just came through. It was positive 29 cents on the dollar, and that's what acted as a catalyst for the company to go up in price. So that's awesome. Let's go ahead and look up BXP. Oops. BXP. All right, so BXP is dropping by just quite a bit actually. We can see a lot of volume in this one, which is really good. Let's go ahead and see 1 year chart. Okay, so it's starting to come down just a little bit towards the 180-day SMA line. If this confirms it as a support, I would want to see next higher highs before taking the position. I love the fact that the company ended up reporting positive earnings over the past year, which is really good and it's pretty rare. So in this case, I'm going to go ahead and set up the closer alert right here, create new alerts at or above, and we're going to follow up on this one just a little bit later. So BXP, that's a good company. We identified this one again a couple of days ago. It's dropping in price right now, and once it approaches this support line at about $89 a share, it still offers about 30% profit margin right here to the levels of $116 a share, which happens to be previous support levels at this level back in 2018. And that is very good. And BXP, let's go ahead and look at a longer chart. All right, so BXP, this one pays 4.25% in dividends. The company ended up trading at about $37 a share, and that's where it was able to establish a very strong support line, to which it dropped back in 2008-2009 financial crisis. And then the peaks were about 120, 130. We can see $140 a share, and it's currently trading at $92 a share. So very good price level, and it was trading at this same exact level back in April of 2020, and very close to this price level back in 2011. So again, a very good recovery, slowly but surely. Once it starts making higher highs, there would be a potential buy. Again, with a 4.25% in dividends, that seems like a very good deal. So once we see a little bit more higher highs, then it would make a little bit more sense to buy. But as of now, we're going to set up our alerts, which I already set up, and we would want to avoid this very high volatility. But I really like the idea that it made double bottom in here, so that's good. BXP, good. All right, VNO. All right, VNO ended up dipping, and I do remember again setting up the 4th alert. You cannot see it on the side because I ended up getting triggered just because of the earnings report, right? So it ended up running up because of, again, rumors most likely. And when the earnings report came out, even though it was positive, it ended up selling off all the way down to $36 a share. And let's go ahead and look at a 1 year chart real quick. Again, it's one of those companies that hasn't really fully recovered just yet, trading above 180-day and 20-day, no, actually above 180-day but below 20-day SMA line. Earnings report had just gone through, so it would be a very good buy for those of us who are trying to continue to hold for a while. So I definitely want to set up my alerts to see higher highs. That's what I try to aim for whenever I'm finding a company that I'm interested in. So at or above, perfect. Good. All right, VNO is a good one. Let's go ahead and see what else. NWN. All right, NWN is approaching a very strong resistance. I definitely wouldn't be very interested in buying it right now just because it's approaching this multiple year, actually, is this a 1 year chart? Yeah, it is. Just 1 year resistance line. Okay, but if you look at a 3 year chart, ever since 2020, so February of 2020, it ended up dropping again significantly, made double bottom. We ended up setting up our alert somewhere around here, which it ended up breaking through. So we're going to go ahead and set up another one at or below. and we would definitely want to see a little bit more movement just to see where the price is going to go. I like the fact that MACD indicator is identifying that the price is continuing to go up. We have RSI indicator that is not on the overbought nor it's on the oversold side, and yeah, we have the earnings report that is coming out, and let's see if this is actually going to cut it for us. Let's go ahead and look at a 1-year chart again. We have the earnings report on the 26th. Again, we'll see whether this is going to act as a positive or a negative catalyst for the price of the stock of this company to act as a bearish or bullish. But again, we see a lot of volatility here. Most likely a lot of people ended up buying and selling, so trading a lot of it just because it's trading at a very basically major resistance level, support level I should say, and we'll see how the earnings report is going to play out to determine how we're going to trade this stock. But again, a very good setup for us, and let's go ahead and move on to the next one. Alright, so we had BXP and VNO and WN. Let's go ahead and look at NWN. Alright, so NWN 3.93% in dividends, and the company ended up dropping to its pretty good resistance. Okay, so very interesting. It's a very, very interesting company. It says overvalued right now, but let's go ahead and look at a better chart, because on the maximum chart by Yahoo Finance, we can see that the company ended up just basically making higher highs for a couple of decades, ended up skyrocketing back in 2019, but again was very much a bearish company to buy into through that period of time since very beginning of 2020, because it dropped back to $44 a share. So currently trading at $48 a share, it's not a very bad price. It's a very major resistance, but again, if it breaks through, it continues making higher highs, that would be a very good sign for us. $1.49 billion valuation, that is not bad for a company, so still a small cap stock, but a very, very good history of it existing for a while, paying dividends and being very much a bullish on this one. So okay, perfect. So this is what the closer look of this company looks like, and again, we would want to see higher highs before we buy into this one, but definitely for a long term, this looks like a very good stock. We would definitely want to follow up on this one. Let me set up some more alerts. Actually, I'm very interested in this one. I would definitely want to see it break through this 180-day resistance, and once that happens, we're going to have a little bit more feedback on how we're going to trade this company. So that would just be me. All right, let's go ahead and look at a different one, NWN, VNO. We already looked into this one. All right, perfect. Potential buy, HEP. All right, HEP is continuing to make higher highs, again trading above 180 in a 20-day SMA line. We have the RSI indicator that is slightly on the overbought side. We have MACD indicator consolidating and trading at the levels that are pretty bullish. So we would want to follow up on this one. Oh wow, it ended up breaking through both of our alerts over the past couple of weeks at or above, and we're going to set one up below 15-day and another one below 180-day SMA line. Again, I would want to see this 180-day SMA line to continue to go up, because right now it's somewhat flat, but it's actually pointing down just a little bit. So again, I would want to see it making higher highs and breaking out of this channel of resistance and the support, right? So we would want it to trade at around $16 a share, closer to this earnings report. Again, earnings reports are coming out for a lot of different companies, so just be very, very careful with the ones that you're going to be trading. Definitely do your own due diligence, and definitely do your technical analysis if that's what you're doing to confirm that this is a good buy for you. All right, let's go ahead and see what else is out there for us. So we looked at HEP, let's look at ETR. So ETR is a good one. Let's look at a maximum chart. Okay, so ETR pays 4% in dividends. It's slightly on the overbought side across multiple year chart. Let's go ahead and look at it closer. ETR. I just paid $94.95 on the dollar. Earnings report. Okay, so there's a reason why I'm looking into this one. Okay, so the 3-year chart, we can see the company ended up skyrocketing to $135 a share back in February of 2020. Again, ended up losing, let's see how much money it lost, about 40% of its value. Now it's trading at a very, very strong support line, right? So it almost kind of reminds me of inverted cup and handle. I do not like the fact that 20-day SMA line is pointing down, and it seems like it might potentially cross the 180-day SMA line. Those are two major indicators that I follow just to make sure that if the company, just to confirm what potential of the company whenever I buy it is. Again, we have our earnings report that is going to come out on February 24th, and we would want to be very, very careful trading this one. I do like the fact that the company is definitely on the oversold side according to the RSI indicator, and I like that it's making slightly higher highs even though it made this major double bottom, even though the second double bottom again is still higher than the previous one. So very good levels that it's trading at right now, but I would definitely want it to be confirmed as a support first before I buy into this position. But as of now, we're going to go ahead and set up some more alerts and see if this is going to be a positive potential buy for us or not. So at or above, at or below. There we go. So ETR, I think ETR was one of the last companies that I want to look at. Yeah, one more is going to be OGE. OGE, and we have $32.24. Okay, perfect. So 3-year chart. Okay, on a 3-year chart, we can see that the company ended up dropping significantly by about 40%, and it was able to recover probably about 40% as well, actually about 23% from its lows. Again, the company seems to be making higher highs. It's not on the overbought nor it's on the oversold side on the RSI indicator. We have earnings report. Excuse me, the earnings report that is coming out in a couple of days, actually, on 25th of February. We would want to definitely follow up on this one and see how it's going to trade out. So 1-year chart making higher highs, still has a lot of potential for improvement. A very good company we identified just again a couple of days ago. Let's go ahead and we already have alert set up, so it hasn't broken through this resistance level at about $32 a share, $32.50 a share. Once we see more higher highs, then it would make a little bit more sense to buy into this position. But as of now, I will pass on. And again, earnings report that is coming out, I would be hesitant on buying something that hasn't really proven to be very, very stable over the past couple of months. So we're definitely going to be following up on this one once the earnings report comes out, which usually again acts as a positive catalyst for the companies that ended up dropping the value so significantly. And we can see this steep kind of like a waterfall of candles. So let's go ahead and go to FinWiz and browse through some of the companies. So those are the companies that we, by the way, identified as potential buys. And I think one of those, actually 2 more companies, is going to be BP. So BP, we identified both head and shoulders, right? So we're trying to figure out if this is going to end up following this pattern that we identified a while ago. Now the company ended up breaking and making higher high right here, getting closer to $23 a share. But again, it dropped and retracted back to 180-day SMA line. So at this point, we would definitely want to wait and see where the price is going to go. If it continues making higher highs, that would make sense to jump in on the position. But if it continues to make these higher lows, then it would not be a very good buy right now. But at least a good thing is that they reported positive earnings, and overall the company seems to be doing fine and just recovering over the past year. All right, and I think the last company we wanted to talk about during our last stream wasn't BP. It was what kind of company was that? I think it had to do something. BP, not Tesla. MFA. It's gonna come to me. It's gonna come to me here in a couple of minutes. Oh, it was AT&T. There we go. Okay, so AT&T. So they're facing a lot of pressure from T-Mobile right now, a lot of competition. But again, this is an oligopoly. So we have Verizon, T-Mobile, and we have AT&T. So those are the main players in the U.S. market. And we would definitely want to follow up on all three of them just to make sure that we're having our ear close to the ground with the events that are happening. Again, the company has started making lower highs, right? So we have this peak at $31.4, again $29, 29.5, and now we have 20, probably about 29, again 29.5. So those are just very, very similar peaks. Again, if you look at the chart, they seem to be making a little bit lower highs. And what I would want to see is I would definitely want this to be the support that it doesn't break through. If it breaks through the support, it's going to definitely act as a, again, as a major resistance according to the previous examples that we've had, right? So right here, it acted as a very much a major resistance and acted as a very, very strong support prior to this when we saw a lot of volatility on the markets. Again, 75 cents on the dollar. That's, again, very positive earnings reports that they came out with. And we have the next one that's going to be coming out in about 2 months. So we don't have to worry about that one for a while. But again, T-Mobile, overall, it's on the oversold side. And as long as it confirms this as a very strong support, there would be a very good potential buy because the AT&T had existed for a very, very long time. It offers, till the next major resistance, it offers about 36% profit. Very long-term investment into this company would be beneficial. They also pay 7.12% in dividends. And again, if we look at their competitors, they don't pay dividends. And if we look at the 5-year chart, they seem to, they seem to be on the overbought side, and that is not something that seems to be too appealing to me. So, all right, let's go ahead and browse through. Yeah, definitely on the overbought. Let's go ahead and browse through FinWiz and see what we can find. So these are just some of the companies that they usually have on their front page. Majority of them have almost no volume, or they just seem to be extremely manipulative. We're probably not going to find anything that seems to be way too appealing for us. So retracted. Yeah. Again, not knowing much about these companies, not knowing what acted as a catalyst for the price to go down so significantly, we're definitely going to have to find something that makes a little bit more sense. So Blue, B-L-U-E. Yeah, definitely on the oversold side over the past 3 years has been making lower lows. Yeah, definitely not interested in this one. All right, let's go ahead and sort those companies by channel up. So channel up seems to be pretty bearish for me, pretty bullish, sorry. Pretty bullish indicator for me, and I really like trading companies that show this kind of a pattern. We definitely would want to, again, if you're trying to be a long-term investor, that would be a good idea to invest into something that has been doing well for a while and ended up dropping significantly to find the most valuable stocks, right, that seems to show the potential of the recovery. But again, if you're looking at the company that has these very much volatile ups and downs, so peaks and valleys, right, at this channel, would it make sense to invest into a long-term, or would it be more appealing for a swing trade? So I'd say for myself, I would want to swing trade this one, not specifically this company, but the ones that show this identical channel, right, where we can see a lot of peaks and a lot of valleys and confirmation of a resistance and a support. So patterns tend to repeat themselves. Again, they don't have to. So we would just want to trade based on our experience and based on what the charts had shown to us prior to this. Actually, let's go ahead and change, instead of channel up, because we're not trying to find something for a swing trade, let's go ahead and see if we can find something better with a ascending triangle. I think these ones are very good setups, usually for the companies that are potentially a good buy at the moment before they break through the resistance. So there are a couple of different things that we would want to look at. We would want to look at volume. So this company, for instance, doesn't have a lot of volume, but you can see that it used to trade right around here. It catches the $20 price level. So at this point, would we want to check this one out? I'd say yes, even though it doesn't have a lot of volume. QH, let's look at this one. I don't think we've checked this one out before. It seems to be QH. Let's look at this one again. QH. I don't want to be too quick to judge, but yeah, it seems to be very highly manipulative. So $464 million valuation. We have a 5-year, let's look at a 1-year chart. So used to trade at about $8 a share, ended up dropping to $6, $6.50 a share. 5-year chart. Yeah, I would definitely want to stay away from this one. It's way on the overbought level, and it's extremely manipulative, because if we look at a little bit closer at a 1-year chart, we can see that the volume just tanks. Even though it continues to make higher highs, I would want to know a little bit more about the company before investing into something that hasn't existed for a very long term, for a very long time again, and it's definitely on the overbought side. If we look at the previous levels of resistance. So QH is not making it to our list of undervalued stocks for now. And again, if you have any ideas for the companies that you want me to go over, just go ahead and leave a comment. I'll read it, and we'll make sure to break down that company. So GVAB, let's look at that one. Sweet. Okay. Let's go ahead and look at a 3-year chart. Yeah, definitely on the overbought levels. You would want to ask yourself, where would you not want to invest into a company? At which level would it not seem to be appealing to you, right? Even though it makes higher highs, even though it trades above 180 and the 20-day SMA line, it's trading at a multiple year resistance line. So we would not want to invest into something that is on the overbought side. Again, this is just my perspective. I would not want to invest into something that is definitely on the overbought side. We have a lot of indicators that are pointing down. So we have MACD indicator and RSI indicator, right? So MACD indicator and RSI indicator that are slightly pointing down. So MACD is definitely pointing down. We have RSI that is consolidating and seems to be making this, again, ascending triangle pattern. And what I would want to do, I don't think I'm going to add this company to our watch list, but I would just be curious to follow up and see how high this company can go if it breaks through the resistance. Again, it's been building up to this for a while, right? Ever since, what is this, beginning of 2020, right, when it hit a low of $17 a share, was able to successfully recover, which is great for the company. But again, we would want to find something that has a little bit more, that's on the oversold side, that has a little bit more potential to offer for us. So again, multiple tops, again, just like it was identified here, multiple tops would just be very, very careful with trading those like that. Let's get SJW. SJW definitely has some volume, which is good. Let's see. There's an earnings report had just came out on the 19th. It ended up creating a little bit of volatility, but the price down to 180-day SMA line. Yeah, if we look at 1 year, actually let's look at a 1-year chart. Yeah, definitely seems to be on the overbought side. I would not want to be investing into something that hasn't really shown a lot of signs of a reversal potential. So at this point, making higher highs, but again, still approaching this multiple month resistance line. I'd be very, very careful trading this one. So definitely not making the cut for us. All right, 3-year chart, our third page, and let's look at any of these ones that seem to be appealing. Let's look. And again, if you have any ideas for the companies that you want me to look at, don't hesitate to leave it in the comments, and we're going to break those down. So GP, let's look at GP. All right, GP is way overbought, way highly manipulative, not very interested in this one. GP, yeah, I'm looking into this one. GMST. Let's look at JMST. All right, so this one has not been shown to us. JMSTR, yes. Yeah, okay, we're not gonna do this one. Just yeah, very highly manipulative, not very interested in those kinds of stocks. All right, let's go ahead and look at our home, and let's see if we want to somehow. We can probably use the scanner a little bit later, actually, but let's look and see if there's anything else that seems to be appealing to us. HVT looks pretty good. Some of these companies just have such beautiful patterns, and it's a shame not to take advantage of those. QH, we'll look into this one. Very interesting, very, very interesting. TRI. Interesting, double bottom, multiple bottom. Let's go ahead and check out double bottom, and let's see which kind of companies are making double bottom, so we can identify the most value and see if there's anything we would want to be interested in following up or taking a position on. So VMBS. All right, VMBS doesn't, it's definitely on the overbought side, making double bottom. Not very interested in this one. So it's finally, MACD indicators finally starting to point up, but again, not very appealing to me. So yeah, on a 3-year chart, it had seen its share of growth, but again, this is a very minimal growth to just what, 7% over the past 2 years. So definitely it wouldn't be wouldn't be the very best company to invest into, again, from technical perspective. Let's look at this one right here, CPB. Looks like it has a lot of peaks and valleys. CPB, again, 3-year chart. Would you want to invest into something that is trading at $46 a share? You know, $46 a share that is trading above 180-day SMA line on the 3-year chart. Seems to be pretty good. It has, again, these peaks and valleys. For those of us who are swing trading, this might be a pretty good setup. So the company had just retracted back to its previous lows, right, to its previous major support line. Again, how much potential does it have, and how would I want to trade this one? So for this company, I would definitely want to see higher highs. There's a lot of room for growth till the next one's about 2.5%, till the 20-day SMA line that we have, about 5% till the 180-day SMA line, and we can also see about 15% to the next major multiple month resistance line. So definitely want to make sure that the company kind of falls within this channel, right, between $53 a share and $46 a share. If it drops below this $46 a share, then we would have to be very, very careful swing trade in this one. So again, peaks and valleys are important to identify, but if you're not careful, it can potentially drop below the support line, and then it's a lot of air till the next major resistance, major support for the company. So for those reasons, let's go ahead and move on to the next one, and we're going to continue our stream for another 12 minutes and see if we can find any other companies that seem to be appealing. Let's go ahead and look at ESPR. Alright, so ESPR is doing just fine. It seems like it's recovering right now. Let's get a 3-year chart. This is exactly where it's so important to look at a multiple year chart for the company, because it just continues making higher highs. Sorry, my bad, making lower lows. So would I want to trade this company? I'm not very interested in this one, just because it's not making higher highs, and it has a lot of major resistance levels that it's going to have to break through in order to be successful. At this point, the company is recovering. The MACD indicator is pointing up. We have RSI indicator that is not on the overbought nor it's on the oversold level. So it would have to be very, very careful with buying at this kind of company. So just gonna have to be following up on this one soon. Actually, let's go ahead and set up our alert, even though this company doesn't seem to be very appealing, but I'm curious to see where it's going to go. All right, perfect. And let's go ahead and go to our third page and see if there's anything else that seems to be attractive to us. Ymtx. Let's look at this one. Ymtx, wow, so it had a reverse split, 1 to 20. Yeah, extremely volatile. Would not be if you're interested in buying something that is definitely on the oversold side, but again, not shown any signs of growth over the multiple years. And it has shown a lot of volatility, a lot of manipulation. Again, the company ended up dropping in value by about 70% and only recovered that after about, let's see how long it took, about 260 days, right, for it to skyrocket back up to $90 a share. Again, reverse split right here. Reverse splits are never really a good sign for the company. It's just to keep it above a certain level of float, for instance, for the company to be, instead of being in the pink sheets, the company can do a reverse split and not end up on the pink sheet. So again, this is a extremely highly volatile company. I would not be very interested in this one, but again, if you look back home, we can definitely find some other good ones. And let's see if we can find any good ones. QH, I think we looked into this one, trend line. Q8, yeah, we did. Let's see what else we can find. HVT, FLXN. This one seems to be doing fine with the wedge. So this one is a descending wedge. AQST, let's look at this one. AQST, okay, so this is actually an ascending wedge. Very interesting. So it continues to make higher highs. Let's look at the support levels. Support levels are doing just fine. Let's look at 1 year chart. So with a 1 year chart, trading at this level definitely doesn't seem to be on the overbought side, nor it's on the oversold side. I don't like the MACD indicator is pointing down. I would want to see the company continues to make higher highs. We see the RSI indicator is not on the overbought. It's actually on the the oversold levels. And we have the earnings report that is coming out in about 3 weeks from now, on March 9th. Yeah, definitely gonna have to be very careful if you're trying to trade this one. We have about let's see, how long does it usually take for the company? So this is about 88-day jump. This is about 60-day change of pattern, right? So another peak. And let's go ahead and draw another trend line and identify and see where the price should be expected to meet the resistance. All right, there we go. So if the price is currently trading at $6.05 a share, no, this is actually 180-day SMA line, so it's actually under. So $5.66 a share. We have time until what is this, June 19th, for it to be in this channel. And then once the company breaks, so once the price of the stock of this company breaks through this resistance or through the support, we would want to identify. This would basically dictate how we would want to trade this company. It is possible that this earnings report is going to act as a catalyst, and whether the company is going to report positive or negative earnings on this one, we will determine whether it would be a good buy or how we're going to trade this one. So for those reasons, I am just going to go ahead and keep this one in our watch list, and we'll follow up on this one. Let's go ahead and set up our alerts real quick. At or above, that's good, and at or above. Perfect. And we're definitely going to set up some alerts below this price level, just to see where the price of the company is going to go. At or below. Awesome. All right, cool. So AQST, very interesting. Earnings report that's coming out. Yeah, for those of us who are trying to swing trade, companies like these ones would be pretty good. We would definitely want to see the peaks and valleys that are very easily identifiable here. The only thing that I would be very careful with is events like this, right? So we ended up seeing this massive just drop to the previous support level. And as long as the company trades above 180-day SMA line, and once we see this kind of like a golden cross, what I call it, the 20-day SMA line crossing 180-day SMA line, then it would act more as a support and as a green light indicator for us to see that the stock of the company is doing well and it's recovering to make higher highs. So again, a very good company, just depends on how you trade it. If you're trying to do it a long-term, as a long-term investor, then again you have to consider that the company used to trade at about $16 a share. If you're trying to do it as a swing trade, you need to figure out where your peaks and valleys and major lines of resistance and support are. And again, whenever you see the earnings report, just gotta have to make sure that you understand the risks that come with that. But again, high volatility usually means a lot of risks. I should say high volume of trade, which is unusual for a specific stock, is going to yield most likely some risks. We have ADC. Very interesting. And again, if you have any ideas for the companies that I should break down, we still have about a few more minutes. We'll break down maybe a few more companies and call it today. Gee, that's nice. IDXD. Very good. Okay, so this company is making third bottom, double bottom. VMBS. Let's look at this one. VMBX. VMBX. All right. What does it not show it to us? VMB. Okay. Interesting. VMBS. There we go. I think we looked into this one before. Yeah, we looked into this one before. All right. Jobs. Aptx. Let's look at this one. Aptx. Okay, so this might be my favorite company, I think, overall, over the past hour, I guess, of streaming. 3-year, actually, maybe I shouldn't say that. Maybe I shouldn't say that just yet. I like the fact that it's making higher highs. You can see it on the RSI indicator. I like the fact that it's been consolidating on the MACD indicator, but I also don't like how much volume it has. It basically has no volume. If we look at a 1-year chart, we can see a lot of manipulation just happening with the company's stock right here, right? So I would want to stay away from this one. And again, we had the earnings report, again, negative earnings report that acted as a very small catalyst for the price to be basically dropped by about 6%. But again, it was able to recover and start making higher highs. Let's go ahead and draw our trend line real quick and see what we would expect from the company's stock from here on out. So I like the fact that 15-day SMA line or 20-day SMA line is trading above 180-day SMA line, and I love the idea that it's making higher highs. Let's go ahead and look at 180-day chart. Again, so volatile. I just don't really like the these spikes. It's good to have those if you own the company, but it's not very sustainable, because usually you make lower lows after that, just like it happened right here, right? So let's look at we're gonna look at Yahoo Finance just to determine how long this company had really been paying for, has been paying dividends. So 3.93% in dividends. That is good. $1.49 billion valuation. That's good. Okay, 5-year chart looks good. Gosh, I'm having deja vu right now. Did we already look into this one? Yes, we did. And no, this is NWN. This is different. And also, NWN, I want to make a note for myself. NWN. There we go, potential buy. Yeah, I already made the note for myself. Aptx, let's look at this one. Aptx doesn't pay any dividends, small cap stock, makes a lot of sense. Back in 2018 ended up dropping from $25, $26 a share. Never was really able to recover from that on a max year chart. Ever since 2018 it was trading. Not very interested in this one. Definitely a very low cap stock, extremely highly manipulative. You can see a ginormous spike in volume right at this level right here. Would not want to trade something that is overvalued here, and just overall is highly manipulative in comparison to some other companies that we've looked at today. So overall, it's 8 p.m. where I'm at. I hope you guys enjoyed the stream. If you did, go ahead and leave me a comment in the comment section below. If you have any ideas for some of the companies that you want me to break down, don't hesitate to leave those in the comment section again. And I'll see you in the next one.